I've been forecasting for the past 2 or 3 years that house prices were going to crash. Not correct a little, but crash.
Even before the events of last week, the housing crash had already started. Prices are down 10% since last year. Repossessions are rising, sellers can't sell, buyers are few and far between, and the banks and building societies have severely restricted their lending. So how does the global financial crisis affect an already depressed housing market?
Prices have fallen an average 10% since last year, but for some, the drop in value is much worse. Despite living in a property hotspot near Swindon, Rosie's house has slumped in value. She put her house on the market for £450,000 and has since had to reduce the price to £325,000. That's a staggering drop. But even though she slashed the price by a quarter, the sale fell through the day before she was set to exchange.
Come on in.
Thank you very much. If anyone had said to you a year and a half ago when you started down this process that if you reduce by 25%, you still can't sell, what would you have said to them?
I'd have said it'd been ridiculous. Actually, the pricing of it or the marketing is absolutely ludicrous. People want to come here and live in Wootton Bassett, but at the moment, the market, I would say, is stagnant.
According to the Council of Mortgage Lenders, repossessions have already increased by 48% on the same time last year. Last week's news is going to make things even worse, and increasing unemployment will only put more downward pressure on house prices. In theory, this is good news for first-time buyers like Katie, but many still can't afford to enter the market. Katie is a member of a group campaigning for affordable housing.
I don't think people are ready to get back into the market yet. I think they're seeing that what people have talked about for a long time, which is house prices coming back down to a more affordable level, is starting to happen. And I think the first-time buyers, they're not stupid and they're not going to get into the market until they think house prices are looking more affordable.
So what have we seen? Sellers who can't sell despite slashing their prices, buyers who won't buy in the current economic climate, and the collapse of global financial institutions, which could lead to rising unemployment and repossessions. Add those factors together, and I believe that house prices are not going to recover anytime soon.
Previously, I was forecasting a fall of 35% in house prices from peak to bottom. Given the events of last week, I'm now wondering if that was a tad optimistic. I put it now at a probability of 50% that prices could fall by a half.
Jonathan, you're very depressing, aren't you? I just wonder if you're the house price equivalent of that bloke in Dad's Army who goes around saying, we're doomed, and you kind of have a professional interest in talking the market down.
It is true I'm Scottish. I, as an investment advisor, don't care what happens to house prices, gold, shares, whatever. I just am in the business of taking a view as to what's going to happen and giving that advice to my clients.
You say you think there's a reasonable chance that house prices might halve, which is very worrying.
Already we know that some of the new developments which were sold in 2005 and 2006 are going for 50 pence in the pound. Yes, I could see some parts of the country falling by perhaps 3/4. Northern Ireland, for example, went up 400% in 15 years, way beyond reasonable expectations. Yes, I could see significant falls there. London, I think, will be particularly hit hard because of the downturn in the city.
Mary?
Do you not think that the events of last week, the big clear out in the banking system and the huge injections of capital, will free up the banks to lend more money to home buyers and help the market as a result?
No, the problems are actually going to move from the financial sector to the wider economy, and what we will see now, unfortunately, is exponentially rising home repossessions and therefore rising unemployment as the economy turns down. And when you see rising unemployment, you see falling house prices.
So how long do you think it'll take for this market to hit bottom, and how will we know?
We're forecasting, our base case is 2011, which is 4 years after it started. If you look at the early 1990s, it was around 4 years, depending upon where in the country you were.
But will there be an obvious signal for ordinary people, like suddenly it's cheaper to pay a mortgage than it is to rent a house?
And you know why she's asking you that? Because she's been renting for several years. She wants to know when to buy.
I'm hoping it's soon.
Yeah.
Yes, correct. Thank you, Jonathan.
And she's absolutely called it right. Yes, for example, the cost of mortgages will at some point be lower than the cost of renting, particularly because in due course, with the recession that I believe we're in, the Bank of England will be forced to reduce interest rates, and that will impact on mortgage rates, although it may not impact on how much money they can lend because of the financial issues.
I'm always a bit sceptical of advisors because, you know, why not do it with your own money? Or why not actually do it with money rather than telling other people what to do with their money?
We sell advice, and we've got the call right.
OK, Marion, prediction time. Where are house prices going to be compared to now in a year's time?
Well, I'm absolutely with Jonathan on almost everything, but it does take a while. So I'd say in a year from here, another 15%. But it won't be over then.
Yep, OK, I agree with you. It'll be between 10 and 15% lower than it is now. Richard?
Well, I think it was Economist magazine said this is the greatest bubble in history. So it's got a long way to go, unfortunately. I think, say, in a year, another 25%, but I think Jonathan's right. They could halve from the top.
But you think that much in a year or that much to the bottom?
Over the next 2 or 3 years. But in a year, maybe 25%. There's no hurry to get a bargain.
Is that music to your ears?
Perhaps to our clients' ears, clearly it's going to be very grim for the economy and for the country. That's nothing that I can legislate for.
OK, Jonathan, I don't know why I'm saying thank you very much. It's all very depressing, but thank you very much.
Thank you. Thanks, Jonathan.